Hey guys, how's it going? Welcome to another episode of 10-Minute Trades. Today we're going to be taking a look at Bank of America stock, ticker symbol BAC. And I chose this one because I was watching the market today. I was watching the options order flows, and there was a lot of bullish order flow on Bank of America today. Quick plug, we just added unusual options activity for free in our Discord server so you can get access to order flow data, large institutional buys on calls and puts. So if you're interested, make sure you log in and join our Discord server. But let's get right back into it. So, the first thing I noticed when I looked at Bank of America, today we had a green day today. The market was overall green. Bank of America up 1.7%, which is not really that great considering a lot of the big tech stocks today were up big. But of course, Bank of America is more in the financial sector. From pre-illness to peak illness, Bank of America went from about $35 all the way down to a low of about $18, $17 back on March 23rd. So after that, though, a lot of choppy trading in Bank of America. It's up and down and up and down, just zigzagging all over the place. And I think a lot of that is because, yes, the economy, and yes, it's a bank and in the financial sector, but I think a lot of it is because that ticker and other financial sector tickers are very heavily dependent on the news and stimulus talks and what the government is doing about mortgages and evictions and forbearance. So I think it's very catalyst driven, for better or for worse. So I think that's why it's just so choppy, because whatever news breaks, if unemployment numbers are increasing or people are losing jobs at a higher rate than last week, for example, I think it affects financial sector stocks a lot. And I think that's why it's just so choppy. And this choppiness made it really hard for me to analyze, to be honest with you. So viewers know the first thing I like to do is start with Fibonacci retracement levels. So what I did was I thought going from the recent lows on March 23rd to the recent highs on June 5th was a good area from start to finish. And I'll show you that right here. And it does, some of these fib levels do line up pretty nicely. Specifically, if you look at the 50% Fibonacci level here, you can see it looks like it was an area of support the past few trading days last week. And also looking back in time, it looks like it was an area of resistance here in early April, again mid-April, end of April, and then a few days here in early to mid-May. So I do think this is a fairly good representation of the Fibonacci retracements. Let's just go ahead and zoom in here. The next thing I like to do is try and identify as many areas of support and resistance that I can. So let's get right into it. The first area I noticed was this line here, which falls pretty much right on the 38.2% Fibonacci level. And I draw that because it looks like on September 21st, and then actually most recently today, the intraday candles, or the wicks I should say, got pretty close to that level, which is around in the high $24. And then if we go back in time, you can see August 20th, 21st, we got to that level as support on the intraday wicks. And then going back even further, you can see a bunch of these wicks here, July 24th, July 15th, June 25th. It was acting as resistance back then. And if I keep zooming out, there's some historical price data, but nothing really at that price level. We'll talk into some other resistance lines, or support lines, I should say, when we look at some of this historical data. But let's just keep working here. So this line, I thought, is another area of resistance. You can see the past few trading days, we've been topping out at about $26 and some change. And again, most of the price action is recent, back in August or so. But if I zoom out, you can see back in 2019, in August of 2019, in May of 2019, in March of 2019, it was acting as a pretty decent area of support. We bounced off it a few times back in 2019. So I think it was once support, but now it is going to act as an area of resistance. Let's keep working and identify some other areas of trend. And I think $22, $23, and $30 are other areas of resistance up above and support down below. For similar reasons, you can see a bunch of candles going back in time to earlier in the year where it was bouncing off about $22 as support and then bouncing under $23 as resistance. We have a few more lines I've identified. I think $27, high $27, close to $28 is going to be an area of resistance, because you can see we recently topped out there August 11th and 12th. We sort of had some weird price action here back in early June. But again, if I go back out in time, you can see October of 2019, it was area of support. And then all these trading days back in early to mid-June of 2019, it was area of support as well. Area of support back in February of 2019 and end of January. So I do think this $27, $28 mark is going to be a strong area of resistance based on some of the historical price data. All the way down here at about $19.50. Looks like there was some support there during peak illness levels. We can see a bunch of candles and wicks bounced off this area back in March. And then lastly, between these two, I believe $21 is going to be another area of support. You can see there's a candle here. This wick got pretty close. Another candle, bunch of wicks here. So it looks like that's another area of support. So where are we right now? So today, like I said, we had a green day. We kind of had another rally compared to how we ended Friday. The one thing to note though, this orange line represents the 21-day moving average. This pink line represents the 50-day moving average. So as you can see, the intraday wick pretty much touched the 21-day moving average and then closed below it. So that tells me that we might have a little bit of resistance here at about $24.60 or 70 cents, bouncing off that 21-day moving average. So the next area, I mean, this area of this moving average is also very close to the Fibonacci level and this trend line. So I think somewhere in the high 24s, low 25s is going to be a pretty significant area of resistance that we need to break through if we're going to have a bullish trend and kind of reverse this downward trend. So speaking of that downward trend, let's try and look at a trend line here, because as we can see, a lot of chop. I mean, overall, since March, yes, the trend is kind of overall up, but recently it's been a little flat and then, dare I say, down. So I think the most recent trend as of about August 11th and 12th is more down and to the right. So if we draw a trend line, something like this, I can draw a trend line incorporating the bottoms of these candles here, incorporate some of these candles here as well. I think the overall trend right now is bearish short term, and that is not a good sign. But the one nice thing is we've had 2 green days in a row, so we are, looks like, trying to break that trend and become bullish short term. As we can see, the RSI back on September 23rd, we had a few days of red in a row. RSI was very close to being in the oversold category, and we've had a little bit of a rally here the past trading week. So hopefully we can sustain that. Today's just Monday. For the rest of the week, hopefully we can break this downward trend and start an uptrend or a little bit of a bull rally. Now, if you're not a fan of this trend line, I also tried to identify a parallel channel, and it basically mirrored my trend line. I drew it from the tops of some of these candles here to the bottoms of these candles here. And again, this trend line and the parallel channel are both bearish. They're down and to the right. But the one thing to note is that today we closed right up against the top of this parallel channel. So tomorrow is going to be key, meaning are we going to break out of this parallel channel and break above this 21-day moving average and potentially this fib level and the trend line here? Or was this just kind of a red herring, and are we going to still continue the downward trend? Currently, unless some stimulus news breaks, I think in the short term we're going to continue this downtrend, because I think to break out of the parallel channel, to break above the 21-day MA, to break above this trend line, to break above the Fibonacci retracement level, it's going to take a lot of juice. And I think the only thing that can provide the juice right now is a stimulus bill passing. So right now, personally, and of course none of this is financial advice, it's just my opinion, personally I am still short-term bearish on Bank of America. I think we're going to have a little bit of a sell-off in the next trading day or two as we get closer to the middle of this channel. But that's just my opinion. We'll have to wait and see what happens. Let me know if you've ever traded options or if you own shares of Bank of America. I personally have never traded bank stocks. I am a little bit skittish on financial sector stocks right now, because I am concerned that if a stimulus bill doesn't pass, the market may sell off again. So we'll have to wait and see what happens. Let me know if you agree or disagree with my technical analysis. Let me know what ticker you want me to look at next. And as always, happy trading.